Trees waiting for the summer, knowing there's nowhere to go.
All right, guys, welcome to the live trading room. Hope you're doing well. Hope you've had a nice start to your week. This is the London live trading session where we go through 8 currency pairs, I should say, and we look for opportunity. We look for trading ideas, trading predictions, trading setups, and executions that meet my own trade plan playbook, my own rules. So it's a great place to be because not necessarily for you to come in and copy trades. That's not what I recommend or promote at all. What it is a place where you can have a realistic expectation about what trading is as a whole. And if you're new to this room, that's exactly what you're going to see. You're going to see it's robotic, monotonous, mundane, systematic, process driven, and it's very consistent. So it's a great place to be because you're surrounded by other people that are all on the same path of becoming a better trader. That's what we want. We want to become more consistently profitable, all of us, including me. Got Chris in the house, Duncan, Push, Paul, David, welcome. Hope you're all doing well. I'm just going to bring on the screen here. So let's go down to the old screen. If there's anyone who's looking at any setups that you want to let us know about, I'd love to hear those. We're just going to share this screen. Whoops, can't do that. This should work. Cool. Everyone should be able to see the screen there. And as I say, if you guys have got any setups, let me know. Morning, Anthony. Middle of the night. Yeah, what's the time there? Must be 1, half 1, half 12. Where you are. Good to have you in the room, though, as always. Timon's in the house. Martin's in the house. Tim. Jerry D. All right, let me just double check that we are streaming here. Says we are. Says we are. All right, so that's going to be the plan. If you guys, it normally takes, it can take anything from an hour to 3 hours, but normally we're done in an hour and a half to 2 hours. That's usually the average time it takes to get through these with a discussion, with kind of talking through the process, looking at opportunities that have played out, how we're going to adapt to those, what we're looking at next, how we're going to adapt to that. And if there's lots going on, sometimes that can speed up the room. Sometimes it can make the room go even longer because we end up talking a lot about different things. So it just depends. Just depends. So let's get stuck in then. First thing I want to kick off by saying is there's a lot of people who are following advice on Instagram, TikTok, Twitter, all the other social media platforms where you're seeing a lot of traders, promote their trading apps and how much they're earning and all this kind of stuff, and getting people hooked into some kind of scam, some kind of investment vehicle where they're asking you to invest their money or buy their thing. And look, here's the thing. If people are showing you that kind of scroll up and seeing all the buys and all the money they're making on the app, if you believe that is true, then you don't know enough about trading to even start trading. Like you haven't earned the right to even risk any capital in trading sensibly. The reason I say this is because I was looking at one the other day, and it was on the thing, and he was scrolling through, look at all my buy, and you could see that they were all the same market, right? He had placed about 30 orders on one market. And then when you stop the video and pause it and zoom in and look closely, and you look at the position sizing, and you look at the times of the trades, and you look at how much capital is in his bank account or in his, his trading balance, and then you look at the trades, it works out to like 50% risk. So he's risking 50% of his account, which basically what they're doing is this. If you think of a regular business where they have to get leads, right? They have to get leads, and you've seen plenty of Facebook ads, right? You've seen plenty of Facebook ads where the company has a marketing budget. It's usually 5 to 9% of the total revenue of the business, which is a sensible allocation. Some people spend more, some people spend less. 5 to 9% is a good marketing budget for Facebook ads. And a company will take the revenue and they'll have this budget. It might be 10 grand, it might be 20 grand, it might be, it might be 50 grand, it might be 100 grand, right? It might be $1 million. And what they do is they allocate that fund to marketing to generate leads, okay? Now, how do you get the best leads? You show people what they want to see, right? That you think is going to help them, and they come in and they buy your thing, right? With these Facebook, these trading gurus, their marketing spend is the amount they're risking and blowing on those accounts just in the hope that they get a win so they can show you. So it's just like when you spend some money on Facebook ads, you lose some money because you're not targeting the right audience. They're just putting their budget into a trading account and going, right, well, what can we blow on this? 50 grand, 20 grand? Yeah, 100 grand. Let's do that. Place a load of trades. If it loses, it loses, but film it. And if it goes up and it wins, we've got the advert, and we'll attract those people. And that's all they're doing. They don't know how to trade. They're not trading. Because if you look at the style and the trades that they've placed, any decent trader will know that they are not trading. They're not trading. So it's an advert. It's an advert with a marketing budget. That's all it is. It's not a trading account and a trading guru. It's a advert with a marketing budget, and that's it. And if you know anything about trading at all, you can see it a mile off from the trades that they're placing. So just thought I'd throw that out there because I'm getting so many messages about, what do you think of this person? What do you think of that person? And the thing is, I've never heard of any of them because I just don't follow any of that. Like I'm not interested in any of that. I'm hardly the loudest speaker when it comes to trading because I tell people that you should go about building wealth the right way, not risking and gambling your money before you've earned the right to risk. Anyway, thought I'd start off with a little warning there because, as I say, my goal is to help you build wealth, right? Not disperse of wealth. And reduce the time it takes you to get to a level of freedom that you've probably gone into trading for. So anyway, let's go into let's flick through the pairs quick. I always like to leave the indicators and the drawings on the chart from the previous week when I do these streams because it's valuable to you guys to see what we're looking at and what we're looking at now. Before I do that, I just want to show you guys a real textbook pattern. We've had a lot of questions about these advanced ratio patterns. They're very popular, and the reason being is because they're very easy to follow. Very objective rule set once you know the rules of engagement into the pattern. Lots of people trade these bats and Gartleys and things like that. There's actually a tool on TradingView for them, and they've become very, very popular in the trading community as a system and a strategy to quite easily implement once you've done a series of testing, which is relatively easy. And one of the favorite patterns, or seems to be the favorite pattern, is what we call a bat pattern, a bat formation, which is a good reward to risk profile because the completion is at their 88.6% of the entire move. So 886 Fibonacci retracement from X to A, and your completion's up at 70.28. This is a real textbook pattern. And another reason these are popular is because people love to get limit orders in place. So it's literally, you know, you can come in here and, you can come in here and you can just set and forget the order. So you go up to the 886, 70.27, you set a sell limit, 70.27, and you're away, whatever your position size is, and you can just set and forget that, right? And then it will notify you when you've been triggered into that trade, and then you don't have to, you know, you don't have to sit here watching it. Now, for stop loss positioning on these types of patterns, what's very popular is an ATR, average true range stop loss above X, which means you give price enough breathing room to kind of not be stopped out, but still be within the average true range in the right direction. And if it goes in the other direction, you want to be out as quickly as possible. And obviously the average true range of the last 14 days, say, will get you out of the trade as soon as you know you're wrong. All right, so that's a great philosophy for using stops, and it's very consistent, and you don't have to calculate anything really. You just have to add the ATR onto the high of the structure. Another popular one is the 113 inversion, so some kind of Fibonacci inversion from A to X, 113. If we just look at the ATR here, you can see the ATR's about 20 pips, okay? So 20 pips above this high is going to put you up at 74, okay, which is going to be around here, around this level here, and you can see that the 113 is at 70.85, so it's about 10 pips, 11 pips more. So that's the difference in stop loss there. But the good thing about a bat pattern is because it's the 886 completion point, whatever stop you use out of those, you're going to get a good reward to risk profile. So I'm just going to remove all of these indicators here because it's getting a little bit messy, but I will just draw on one more just to show you guys the targets, because lots of people saying, where'd you get in, where'd you get out? You know, I'm going to tell you, but it's up to you to go and test these things, right? You should not be copying any of these trade setups, because if you haven't tested them, you don't know the probable outcome, and then that means you're not consistent because you're just taking trades. You know, this could be, I could be going for a losing period here. You could be up, it could be in a drawdown. It's not going to do any good just to copy someone's trades and go and copy someone else's idea, copy someone else's idea. That's not how trading works. It's not how trading works. You need to be consistent and go through a losing period, then a winning streak, losing period, winning streak, and you have to be profitable over time. If you're just picking different ideas from different things, like, you know, like perfume, if you're trading like you buy perfume, you are going to be not consistent, right? You're just getting lucky when you're winning, and you're gambling basically. So here is a 1.3 to 1 reward to risk, absolutely textbook. We can now go ahead and get our stop loss in because we know where the stop's going to go. So 70.84, we can just tick our little stop loss here. We're going to go 70.84, hit enter, and that's it. We don't have to worry about that one anymore, right? We're done. We just go flick through some of these other pairs. I'm just going to go to the 4 hour quick and continue what we was doing there. There's quite a lot of these pattern setups on the reversals. Okay, we've seen this reversal. See this support line? This is what we indicated last week. We've double bottomed there. We've rallied off of that level. This might be a good place to short as a structure opportunity because we're up at previous structure resistance. Okay, coupled with that, we have a completion pattern, right? It's not as textbook as the other ones because the X to A isn't as sore thumb, you might call it. But if we bring on our fib retracement tool here, you're going to see 50% retracement, bat pattern, X, A, B, C, D, completion. We're at that completion. We've just gone past it. So again, you know, if this is valid for you, you're basically, you know, you've got an order there as well. So again, this would be a sell at market because we're at that level. Whatever your position size is, then boom, you're in the trade at a better price. This personally wouldn't be an X to A for me. So it's messy. Okay, I wouldn't have seen that in my testing. This pattern was brought to my attention by one of our members here. But if it is for you, you've got another setup, right? So again, exact same process. You can quite easily get 5-6 trades on this morning just by looking at these reversal setups. Stop loss 24.30, boom. Stop loss 24.30. Let's get in, and because we're in this one, and as opposed to the Aussie trade, we can set the target order as well. So again, fib retracement adjusted for price 2300. I'd get just above that. I always get 2 pips above 2300 handle on the hourly. So take profit 2302, 2 pips above, and boom, we're in. All right, and if you're taking multiple targets, you might have 5 mini lots here, or whatever you're trading, or 1 mini lot, 2 mini lots. You might have micro lots, you might have standard lots, whatever it might be. You might have 1 mini lot or 0.5 mini lot here, and then 0.5 mini lot at the secondary target. Love a good Benjamin Graham quote in the morning. Yeah. Buy stocks like groceries, not perfume. Aussie CAD. So that's pound dollar. Euro dollar, we'll take a look at in a moment. Pound Aussie. Pound yen, I think there's a similar situation as well. So again, X, A. Right. This is a really interesting one. In fact, let's do a little bit more of an analysis on this, because what we're looking at here is we've had this kind of complex pullback into structure, okay, pulling up into this zone. Let's just bring out the rectangle tool. You can see this structure shelf looking left, okay. Nice little zone up there for a potential short. If we bring on our fib retracement and go from high to low, see we've got that 886 there, which lines us up, which you might think lines us up for a bat pattern, but actually this isn't a bat pattern. And that's the reason we have different rules for different setups, because this isn't a bat pattern purely because we hit the 618, not the 50%. We did hit the 50%, but then we hit the 618. So that sets us up for a Gartley. And because the C leg isn't valid for a Gartley C leg, it's not a pattern. Okay, so it's unfortunately, you can't take the pattern setup here if you're a pattern trader. But you could use this as a structure-based setup if you're identifying the highest probability for a rollover. So you might have a 127 extension. You might bring on a fib inversion and go from the low to the high. See, we've got a 1618 in there, and you might start narrowing this down. And you say, okay, I've got a 127, a 1618. I've got the equal measured move. I've got previous structure support, right? You might bring on a horizontal line, and then that might give you enough points. And you say, okay, well, I've got 3, 6, 9. You might have got 8 points now. This qualifies for me to get an entry. Now what do I need for an entry? And then you just wait for price to push up here, and you go, okay, well, if I have 3 points, I have to wait for a double top. If I have 6 points, I can enter on a doji. If I have 9 points, I can just enter a limit order. If I have 15 points, right, etc., etc. See? And you build aggressive entries relative to the confluence and confirmation and high probability of the trade setup. It's a very easy, systematic approach to trading structure that allows you to remain objective in subjective markets. And what that does is allow you to be consistent. And if you're consistent, you're going to be profitable, right? Or you're either going to be profitable, or you're either going to consistently lose money, or you're going to be consistently breaking even. And either of those is a great outcome, because if you're consistent, you know what to do to change it or tweak it. Bit like changing the thermometer on the wall, right? People who go from 5 to 30 to 5 to 30 and it's on, off, on, off, on, off. Well, you don't want to do that. You just want to tweak it by half a degree. Tweak it by half a degree. Make sure it's comfortable and then leave it. And you'll consistently be able to sit at a desk and not be cold, or you'll be able to move around and be active and not be sweating. What chart is this? This is the pound yen that we're looking at the moment. All right, but not a bad level to look for if you're looking out on the daily. You see we had that head and shoulders set up. This is the neckline of a head and shoulders setup right here. And what we're looking at is for a short. Now, because the pound yen is such a big pair, okay, ATR wise, you want a tight stop. So you might not be able to enter on just an aggressive test of this neckline, but what you can do is build out some other indicators, some other filters that give you more confidence and more confluence in the trade setup. And again, equal measured move, Fibonacci cluster, maybe you've got a pattern trade, maybe you've got a Gartley set up there, maybe you've got a bat pattern set up there. Maybe you're looking at RSI going overbought, right? We go down to the 60-minute time frame. You can see RSI is pushing overbought now, pushing into the kill zone of the short zone. I think this is a really nice area to look for a short. And I'll be definitely looking at this. If we can get a double top at this area, at this red zone, I'll be looking to short this for sure. Okay. But we'll come back to that. We'll come back to that because that's a little way off yet. Whereas the Aussie, so the Aussie dollar is an aggressive limit order. The pound dollar is an aggressive order, which we're already in. And then the pound yen is a more conservative, but we are pushing into that zone now. So potentially we could get involved with this in a bit. Can you do pound dollar, euro dollar? Yeah, pound dollar we've been through already. Euro dollar, let's take a look at the euro dollar. What would be nice on the euro dollar is potentially an FTB setup. FTB would be nice on this as well. But let's take a look on the euro. Let's go out to the daily. See, lots going on. Sometimes when there's lots going on, it makes the room go quicker because I'm moving at pace to get through the opportunities because I don't want to miss anything. I'm going to cut off. I don't think YouTube seems to be working. I don't know why, so I'm going to remove this. Don't know why YouTube isn't working. Any questions so far? Anyone got any questions so far? No? Eric says testing the neckline of head and shoulders. Yep. Pound yen's testing neckline of head and shoulders. Yes. Cool. Great thing about this room is you get the continuity, the kind of immersive feel of looking at the same thing over and over again. What that does is it allows you to really follow a journey and learn the breathing patterns of a market. And when you come in and you see for the last 2 weeks, we've been looking for a head and shoulders on that pound yen. Now you're seeing the setup, you're seeing it play out, you're getting confidence that price actually plays these patterns over and over again. 2, you're seeing the approach and how we can adapt to it to involve ourselves in that move. And 3, you're getting the belief transference that it's possible, and also you just have to be disciplined and consistent and wait for your rules to be met in order to get involved with the trade. Otherwise, if you just shoot from the hip, you're gonna be doing that over and over again, and that's not going to generate you profits over time unless you're lucky. And I don't know about you, but I don't want to be lucky. Euro dollar will retest. Will it retest the 1.050 area? Yeah, right. Yep. That's a nice level for it to test. Previous structure support. So let's just take a look at this now, right? Let's just go out to the daily. You can see that we're bearish, right? This is a bearish. There's no doubt to anyone that this is a bearish market. If you are unfamiliar what bearish is, the most layman terms is it's top left to bottom right, and we're putting in new lows continuously, and that is a falling market. It is a bearish market. And what that means in terms of currency is that the dollar is stronger than the euro in this case. Okay, because the euro is weakening against the dollar. You're not getting as many euros to the dollar as you did when it was moving in the opposite direction. Okay, so very, very simple terms, that's what it means. And it means that this market, it doesn't mean that a market is crashing or anything like that. It just means that the strength of one currency is weakening against the other currency. Okay, so the euro is going down in value in compared to the dollar. The dollar is strengthening in the euro, strengthening in compared to the euro. So this is literally, good for the dollar. So we are bearish. If we look left, you can see that we had this really nice test of this level once, twice, 3, 4, 5, 6, 7 times in the past. We've also got that really nice major support zone down here. Okay. But now where we're at is that support zone. So depending on what type of trader you are, you either look for a structure-based long here, because we're still in that realm. Look, if you see, the actual lows are down here. Okay, so until we break this low, you might be cautious that we're likely to see a bounce off of this level. And look what happened. The price action just hit that and respected that support level, bounced straight off of it. And we're seeing a move to the upside now. Where's it likely to go to? Well, the next level up was the major level of structure support, which was tested 7 times, which was this 1.050 level, which Tony just brought to the attention of the group there. That is another major level. So if we are to push up and rally, where are we likely to hold? Right here. Maybe you take a final short at that point. Why do we take a final short at the end of a trend? Because more often than not, markets double bottom. So if we're in a bearish trend and we have hit major support, the last test that you could go for a trend continuation is the final test, right? Because it's likely to become a double bottom before it reverses. So you're essentially catching this last move here, right, before taking your profits off the table and then maybe looking for a move in the opposite direction. So depending on what type of trader you are, you're either waiting for a pullback to look to short for the final time. And I say final time because I wouldn't be comfortable holding this short because of where we're at, right? I'd wait for another close below before getting in again. Or you're looking for a reversal here. I have to say, it's not looking like a reversal from the 4-hour standpoint. However, on the hourly, you can see this double bottom here. We had RSI just tip oversold here. We had equal tests of the low on price, had a V bottom or a double bottom, and then we violated the retracement of the double bottom. We had divergence on the RSI, and now we're seeing a rally up. So you might have even caught a move down there on the double bottom. Did anyone catch that? Anyone catch that? No? But that's where you would have got in. You would have got in at the close of this candle at 0.364, and then you would have been in either for a retest of the highs, or maybe you're shooting a bit higher. But right now, we're in the middle of nowhere, right? So how can we get involved in the middle of nowhere? How can we get involved in the middle of nowhere? It's not very attractive right now, is it? Bearing in mind we've just taken 2 trades already, or we've put orders in for 2 trades, and we've filled on one of them, which is the pound, which is very similar looking to the euro. However, it's not the same. There's not the same opportunity there. It's not the same opportunity at all. This, if I just delete this off, this looks very similar to this, right? And the uninitiated might not be able to tell the difference. Same as the Aussie. Aussie, pound, euro, yen, all these markets look the same, right? But there are subtle differences that put high probability labels on some of them and low probability labels on the others. And guess what? The only way to know what's high probability and what's low probability is to build some rules, go and test it, crunch the numbers, and over a period of time, you'll know if it's profitable or not. And then if it is profitable, then you have to look at what the maximum drawdown was. Could you stomach that? Could you stomach, the drawdown in time? Could you stomach the drawdown in money? And if so, can you add more strategies and currencies to that portfolio that will allow it to not be even more volatile? Okay, in other words, if your maximum drawdown's 10%, but if you add another currency, you could potentially dip to 15% drawdown in your account. Can you stomach that? And if the answer is no, then you don't add it. If the answer is yes, then you potentially add it, but then you add another one, right? Testing is key. It will unlock all of the answers for you that you need for your trading business. But going back to the euro, I think, as what Tony says, 0.50 level is a great level to likely be respected if it gets up there. We're not far off. So if you was taking targets, if you just bring on this fib retracement tool here and go from the high to low, we're currently at the 50% retracement. The 618, which is known as the golden mean, the golden ratio, which a lot of you guys like to take targets at on these reversal setups, that is at 150, 0.50, bang on. So I'd be inclined to get just below that if you're into, confluence of fib ratios and structure and psychological even handle numbers and things like that. Definitely want to get just before that. Any questions so far? We've been through Aussie CAD. We've been through Aussie dollar. We've been through pound dollar. And we've been through euro dollar. See, very, very quick. Half hour. We've been through 4 pairs. With quite a bit going on. We've also taken a look at pound yen. So we've got dollar yen, New Zealand dollar, pound, Aussie to take a look at. Happy to take a look at other pairs if you guys want to take a look at those as well. Has anyone in our trading room got any setups that they're looking at aside from these pairs in this portfolio? This is quite busy for a Tuesday. Tuesday, normally the setups are brewing, but they're not as close to completion as they are today, usually. Again, I don't say all the time, but usually Tuesday's a bit of a dust reset phase, and then Wednesday's where the money is. Tony, you got anything? Eric says no, haven't got anything. No. No. Okay, cool. Let's do this then. Halfway mark, 4 pairs in. Let's refill the coffee cups. Maybe you'll jog your memory to think of some questions that you've been dying to ask for a long time. And we will come back. We'll take a quick 13-minute coffee refill, have a flick through, get some questions in, and I'll see you guys in 13 minutes. All right, guys, welcome back to the room. Hope you refilled your drinks. Didn't see too many questions come in. I don't know why the chat isn't integrated on YouTube, but we got Tony in the room saying Euro news out at 10 a.m., Yank news out at 1:30 p.m. And 7 p.m. So be mindful of that. Also, Tico says Aussie CAD, New Zealand CAD longs. What are you looking at, Tico? Let us know a little bit more about that. Why you're looking long there. New Zealand dollar heading towards back completion. We're going to take a look at that in a moment. Oil shorts, checking it. Yeah, if you're part of this community on this channel, on any of the channels, we're trying to get away from it being, well, it's never been that type of channel, but we want to really stand above the crowd on this. So if you're putting in any setups, this isn't what you're used to with other channels where you just post two words and it's like, tell us a little bit about what you're looking at. Hold yourself accountable. Tell us a little bit about what setup you're looking at, why you're looking at it, what your thesis is, what your prediction is, why that's your prediction. Give us as much information on your setups as possible so that, one, it's more valuable to people on this channel, but three, it's more valuable to you, right? Because, if you're just going from YouTube channel to YouTube channel to guru to guru to guru going, should I short the euro? This is, oil long. It means nothing. So I'm not like dissing you, but do yourself a favor and put some effort into some of the analysis that you're going to post on the channel, because it's only going to help you long term. Dollar Swiss has reached a major structure level, so it may be worth looking at signs for a reversal, says Garrett. Dollar Swiss. Yeah, so if we go over to Dollar Swiss now, you can see out on the, let's go to the weekly time frame here a minute. Look at that. Massive bullish run, right? 1, 2, 3, 4, 5 massive weeks. Every one of these candles is a week. We broke major resistance here and we're pushing up towards these highs up here. So we've got a major level of resistance right here where we're trading at right now. Right? 1, 2, 3, 4, 5, 6, 7. 7 tests of that high. Obviously the major level would be up here. Okay, but we're at that first zone now. Massive extension, over exhaustion, RSI overbought. Let's go down to the daily time frame to see how price is behaving on a shorter time frame. Hit that like a wall. We're seeing a rejection candle there, pin bar. Go down to the 4 hour. Retest. You might have got this retest entry here. Great reversal setup. Really nice reversal setup if you're looking for reversals on that pair. Measured move. Cool. I think that's about it with the comments. But Garrett, yeah, that's a nice setup. So we've really flown through the pairs here this morning. We've got Aussie CAD, which there's a setup there, but it's not quite complete yet. Aussie dollar. Aussie CAD, not too much. Aussie dollar set up with orders placed. Pound dollar short. Euro dollar potentially another short, but we've got to be a little bit more patient on that one yet. Pound yen we took a look at as well, where there's a short and we've pushed into that zone now. So if we go down to the 60, we are in that zone. Now I've got my finger on the trigger, crosshair on the site. I'm looking at how market's behaving in this red zone. If we get a double top here, which I can look at on the 15-minute time frame as well, I could enter this and I could short this. Where I'd be looking for targets, no lower than this structure level down here. Okay, so very conservative. Music kicked off? Is it? Sorry about that. It's when I use this, yeah, it's when I use this damn thing. Hold up. There you go. No risk. Sorry about that. I thought you were adding tension. It was good though. Yeah, that music stuff that I create and I use for my videos, my social media and stuff like that. Those of you guys who I don't know if you guys are familiar, but I run this from my trading. Well, this isn't my trading desk. This is my studio production desk, and I do a lot of creation here, creative work with the old music and the whole thing. So it's pretty cool. Pretty cool. And this here, which I had my phone on, which I'm monitoring the Instagram chat and the YouTube chat, was the thing that was playing the music because I hit one of these buttons and it triggered one of my things. So that's why. That's why. That's what happened. Anyway, let's go to so pound yen. We've got a bit of patience, right? Mike says it looks like you manage space. Yeah, this is my creative zone. I love it. Pound Aussie. Let's go to the daily on the pound Aussie then. Real horrible market at the moment. This is not attractive to me at all whatsoever. More kit than SpaceX. Yep, it's pretty cool. I don't buy kit for like gimmicks and just for the sake of it. Everything is practically thought out. Everything's very practical so I can have an efficient workflow. So one of the things that I see holds a lot of people back in business or development or trading or whatever it might be is not having an efficient workflow. If you have an efficient workflow, it stops overwhelm, it stops procrastination, and it allows you to keep taking actions and moving forward, and it allows you to have an unfair advantage. It allows you to produce at an extremely rapid rate, effortlessly. So if I need something, many people have one desk, right? And they have one thing, and then they have to set up all cameras and lights and all this, and then set up this and set up that, set up their workspaces. No, I would have a workspace just for trading, workspace just for content production, workspace just for business work, live streams, a workspace for my show, a workspace for trading, all that kind of stuff. And I make sure that everything in each of those workspaces I can just turn on, press a button, and go. I don't need to move the camera, and I don't need to move this and change the mic and rig the mic up and do the thing. If it means duplicating pieces of kit, I'll do that. And I've found, and people always say, well, it's all good when you got the money to blow 50 grand on equipment. But I promise you, investing in that is going to pay you more than messing around and wasting your time. So I've just learned that investing in tech, investing in efficient workflows is the best investment of your money. Because I can learn faster, I can implement faster, right? And I can adapt faster. And if you can do those three things, you've got pretty unfair advantage on the rest. Checking out the gold short. M15 bearish engulfing candle, double top after the stop loss hunt. Sounds like a detailed operating system. Yeah, well, you know, you want to create training videos for how to do everything in your business, so it liberates you. Your desk looks like NASA. Is there a daily chore on Euro Yen? Let's take a look. No. No daily chore on Euro Yen. In order for there to be a daily chore on the Euro Yen, the moving averages have to be in a certain order. Okay, so it has to be the 8, the 20, the 50, closest to price, furthest away from price, to identify a trending market. And then we wait for a pullback to the 8 EMA. And if we get a pullback to the 8 EMA, the daily chore signal is a candle where the open and the close in the lower or higher third, depending on what direction we're in. And then it is relative to the ratio of the complete body. And you're looking for that high test or low test with the open and close in the lower or the higher third. And then you, as long as that touches the 8 EMA, the next entry, the next candle could trigger you into the trade by pushing above or below the limit order or the sell stop order, the stop order. So no, there's no daily chore on the Euro Yen for me. Kamani says, let's say you get an FTB set up and an advanced pattern completion at the same time. Do you take both setups, or how do you handle that? Think about it in real time. Okay, so my answer is I take whatever setup plays out first. Okay, think about that in real time. What's going to play out first? I already know what will play out first in I already know in my mind the answer to that in reality of what would play out first. What would play out first? What would play out first, the pattern or the FTB? Kamani? I've gone off of the Instagram chat. I don't think many people chat on Instagram anyway. They don't really put comments. The pattern, yeah. The pattern would finish first, right? Because a pattern can be triggered in a live session, whereas the FTB, you have to wait for the close of the session. Make sense? So you wouldn't wait for the close of a candle to then confirm the pattern's valid. So if you're taking whatever trade setup meets your playbook rules first, whatever one completes first, you take that setup, it's going to be the pattern every time in that instance. Having said that, you might have a rule, and this is a good rule that you might want to consider, is if the completion of the pattern is an FTB, so you're triggered into the pattern trade, okay? You get triggered into the pattern trade, and it just so happens that the candle that triggered you in then closes as an FTB. You might decide, instead of taking conventional pattern targets at a 382 retracement or something, you treat it like an FTB. So you adapt, so you can get a better entry, but then you manage the targets like an FTB. And you might do something like that, or you extend from a 382 to a 618. Make sense? And those are all rules that you can have and you can test and you can go, right, this makes sense. Because what I'm doing is I'm trying to get the highest probability, squeeze as much profit out of high probability moves and protect my capital during low probability moves. And that's all you're doing continuously. So you might do that. You might have a rule that does that. Does it not mess around with the probabilities? This is why you have to test it. I have a rule where I can, if I've identified a trend on my higher time frame and I can use a pattern entry into a trend continuation, as long as we haven't tested the lowest close of the A point, I can get into that and use that as a trend continuation. So instead of taking targets at 382, I'll take them at a retest of that lowest close on the previous test. So yeah, you test it. The only reason I do that is because I tested it and found it to be, I was leaving money on the table by not doing that on just pattern trading. So now I do it. Morning, George. Hope you're well. Haven't seen George in this room for a while. So hopefully that answers your question. Good, and you? Yep, very well, mate. Very well. So the talk of the town so far is the pound yen looking for a double top. Pound dollar, that thing's blasting through stop loss there. Aussie dollar still not hitting the entry. Pound yen, we're waiting for. Dollar yen, New Zealand dollar, really the only pairs that I'm interested in, because the pound Aussie's just moving sideways. Dollar yen I'm not interested in either, but we'll talk about it. And New Zealand dollar, we could take a look at as well, because it's similar to the other pairs that we've looked at. New Zealand dollar is kind of a hybrid between euro dollar and Aussie dollar. If you look at the euro dollar and you look at the Aussie dollar, it's a very similar medium. So this is a pair that we could look at in just a moment. Lots of people are talking about crypto, Bitcoin. I gave my views on Bitcoin last week. I did a YouTube video on that. So if you want to go and take a look at that, you can. Tony Push says Aussie dollar 4-hour bearish bat. My problem is my impulse leg based on the wick. Here is the setup. Not valid. And Tony says not valid for me. B to C is same candle. Yeah. So if you're looking at the Aussie dollar on the 4-hour, right, the reason this might not be valid is because the B and the C is one candle. Okay. And if you've got a rule where you can't have a leg complete in one candle, then you might be looking at this on the hourly, right? And then it's 1, 2, 3 candles. And as long as you still see the move and it's still valid, then that's how you know. How do you keep track of all the different rules for each setup? I have a trade plan that I recite and revise and know off by heart. Maybe you can have 2 different accounts, one for pattern and one for FTB. Absolutely. Yeah. Absolutely. I've got one account just for my swing trading. Right? So daily chore, day swing trading the trend, daily reversals, just on my swing trading account. How do you, same here. Cut losers to break even, just won't have room for a trade to develop further. Cool. I'll drop down a time frame. Potential FTB on the euro in 30 minutes. Yeah, so George has said there's a potential FTB. This is what we said when we looked at the euro. I said, hopefully this turns into an FTB. Okay. If it does, if this turns into an FTB, it's going to be a good one. Because as we've just been out on the, although it isn't quite up at the extreme high of previous structure, it has tested it. And looking left, historically, this is a nice structure zone, right? If we just bring out this zone here, right, you can see that is a nice respected structure zone. Now, if you want to get short here and you're just looking at this thinking, well, I can't just short it. I don't have a reason to short it. Where do I get a stop loss? Blah, 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 blah. Risk reward profile's terrible. But having said that, if you've got a strategy that allows you to get involved short, regardless of, that higher time frame stop loss positioning, and you can get on a lower time frame, and you've got rules to tighten your stop and get a good high probability setup with a good reward to risk, and you trade FTBs, then great. Look, the FTBs just spiked into that zone in 25 minutes. If this candle closes like this, I'll be placing a short order on the hourly time frame right below the low. Okay, and if we close and the candle looks like this, I've got 2 bullish candles in a row previous. Actually, I've got 1, 2, 3, 4. But we've got higher close, higher close, higher close, higher close. 4 bullish candles in a row. A FTB setup at the zone, the start of the zone on the major time frame structure resistance level. What we'd do is place a sell stop order, a couple of pips below the low, ATR above the high, and then we'll just wait for this to be triggered in. And if we get triggered in during the New York session, we've got all that news out later on, boom. Fear-driven sellers come in, we roll over, high probability move, and we just start trailing that stop loss down. Once the New York session opens, we start trailing the stop loss down above the highs, locking in profit targets. And then eventually you get stopped out. But you get stopped out at a profit. So this is why this tag is red. That's on the radar. That's one of the setups that we'll be looking at in 24 minutes. Let's say we have a bigger cipher on the 4 hour, and inside that you have a 1 hour smaller cipher. Do you take both of those patterns? If it's a different X point, I take the first pattern to complete. Okay. If it's the same X point, I take the bigger pattern. What is the probability of my trade I entered earlier? I bought euro dollar, and do you think I'm a... Man, that is the sort of question that just, it's like, do you have ears? Honestly. Like, why are you placing trades and then asking someone what the probability of that trade is? It's great. There's no need. You're not trading, you're just gambling. And I apologize for being so blunt, but just stop. Like, don't trade. There's no need. Learn first, understand the probabilities first, then apply capital. And then you'll go, I know the probability of this, that's why I'm taking it. It's just like, why? Why do it? These are the sort of people that come to me in my DMs and go, oh, please help me. I've lost so much money trading. I'm like, why did you lose money? Because I was trading things and someone didn't tell me the probability of what had happened. So I got in. What? It sounds ridiculous, right? Surely that's common sense. Please tell me. And the most tragic thing that trading has got a name for is being risky. It is not risky. It is not risky. Because it is one of the few businesses that you've got historical data for, that you can go and do market research on, that's very accurate, and then you can build rules around some pattern that happens frequently over time, historically, that has done for years, and then you go and play the edge, and you go and test it, and you find it to be profitable, and then you apply capital, and you know the odds of what's likely to happen next. You can't do that in most businesses. Okay, I'll do that. Sorry. You don't need to be sorry, man. It's your money. But I'm just saying, my whole approach to this whole education space over the last, how long have I been doing these live rooms? 7 years in December. Has been to avoid people getting into those predicaments. And there's no need to lose money. It's giving trading a bad name. It's not risky at all. Trading isn't risky at all compared to other businesses, right? Of course it's risky, but it's not risky compared to other businesses. It's mad that it's seen that way, right? I'll try and close in a small profit, not risking. First, get me a course. Get a mentor. Get someone to teach you. You're going to learn, right? It's going to shave so much time off. It's going to... There's a lot of good teachers out there. There really is. There is a lot of good educators out there. There's a lot of terrible ones and a lot of ones with hidden agendas, but you're a human being. You should have instincts and common sense that allows you to smell BS on people. And maybe people put the blinkers on because they don't want to believe it's true, or they want to believe that it's easy. But it's not easy, okay? Go with a good teacher. If you can find a teacher that's telling you it's hard or not to do it, that's probably the best teacher you want to go for. Do you have any community course where you speak about this stuff? We need to discuss. I have people around with whom you share all this stuff. Yeah, we have Tier 1 Trading. We've got our community at Tier 1 Trading. And I've got a Facebook group. Orsie's in the chat. Orsie, could you post the link for the Facebook group and maybe Tier 1 Trading? I just saw my FX mentor taking the same public transport as me. What does that mean? I don't even own a car. I don't even own a car. My car dealership. We've got a I've got that I don't use a BMW X6, and the car dealership rang and said, "What's going on with your car? Like, it's due. You got so many payments on the finance." And that's another thing, finance, right? People. It makes me laugh on social media when there's so many people like trying to dig out these influencers, and they're going, "Your car's on finance. It must be on finance. It must be on, hire purchase, or you've got credit," right? And first of all, someone digging someone out for that obviously has no idea about money. But the worst thing is the influencers then, or the people trying to prove, like, they fight back and they say, "No, I own it. I do own it. I can prove I own it," and all this. And then it just proves the point that they don't have a clue about money either. Because anyone who's very successfully financially free and has built wealth to the level that they can live from pure passive income or leveraged income knows that it doesn't make sense to sacrifice a large lump of capital, liquidity, and buy something that depreciates. Okay, the only time that makes sense is if whatever you're buying equates to less than 1% of your total liquidity. Otherwise, it's not worth it. You want to use other people's money. Here's an example. If I took 100 grand out of my investment account and put it, which was getting, let's just say that I just did passive investing and I was getting 10% per year on my 100 grand. That's basically 10 grand a year income, okay? Or over a term for a loan, might be 4 years, I'd be getting 45 grand, right? Income, passive, for not doing anything. So does it make sense to take that 100 grand out and lose out on that 46 grand, 45 grand, to then buy a car instead of just paying the 3.9% or 4% or even 5% on the car? I'm literally losing out on 6% passive income to get a car that's depreciating in value. You pay the 3.9% interest on finance, and then you put the rest into your investments and your trading, because that's going to generate more money. So what? It doesn't make sense. It's stupid to buy a car outright. The only time it makes sense is if it's old, 2-3 years old, where that kind of sweet spot is, where you can get value for money, because these cars lose like 20% when you drive them off the forecourt, right? It's crazy. So anyway, this is a bit of a tangent, but the guy rang me and he's like, "Are you thinking about your new car?" I went, "Mate, I'm just not interested in cars." I said, "I find it very difficult to get excited about cars. I hate driving. Cars do not interest me whatsoever." And yeah, and he couldn't believe it. Do you trade London session or do you open trades whenever you get an entry signal? Yeah, my intraday trading I check about every 2 hours. My swing trading account I check every night. Watches are interesting. Yeah, at the moment, look, having said that, at the moment, there is a opportunity with cars and there is an opportunity with watches. Okay, so if you're Andrew says, and then compound the 10% next year after year after. Yeah, exactly. But interestingly, with cars at the moment, if you put your name down for a car 2 years ago, just before lockdown, or a year ago even, some of those cars that are coming out now, the car dealerships are, when you go to collect the car, before you go and collect the car, a lot of the car dealerships are saying, "Do you want to sell this car?" Because we've got a long waiting list, and actually because the demand is higher than the supply, people are earning like 15-20 grand on a brand new car right now. And that is one of the rare times that we're in, where there's a long delay in new cars. People want new cars. There's more demand than supply. And if you put your name down and waited a year, by the time you go to collect your car, you can actually offer it and sell it at a profit. It's a very rare time. Same with watches. If you put your name down for a Rolex, I would encourage you to put your name down for a Rolex and buy a Rolex if you're into watches, because it's a great investment. It's a great investment. Obviously not financial advice, and it's up to you and to do your research. But if you're a watch enthusiast, you put your name down for a Daytona and a Datejust and a Submariner and maybe a GMT Master, and you can put your name down for free. A year's time, you get the thing at retail value. They're selling at 3 times the retail value. You have to be careful though, because Rolex don't like that. Rolex don't like you buying watches to sell them. But keep it for a few years. That watch will only go up in value. Rolexes will only go up in value if you get the good ones. The problem with it is it's not liquid. It's not liquid. It's just like people that buy silver bullion, right? Bars of silver. Yes, might be a safe place to put your money. These precious metals, what Kiyosaki calls it, God's money, right? The money of the earth, silver, gold. But the problem is, when you own physical assets like that, you have to shift them to get the cash. You can't pay for breakfast with the bar. You can't pay for your rent with the bar. You can't pay for your shopping with the bar. You can't chip off a little bit of that. So you have to, you have to have cash. You have to have cash. That's why there's so much BS around these people with NFTs saying, "I'm earning millions on NFTs," right? "I'm earning millions on NFTs." You're not earning anything. You haven't got any liquidity. You can't spend that money. And if you convert it back, you've basically created an NFT, sold the NFT, you convert it back, you're taking a chunk of tax. And people don't honestly, just be careful what you listen to and pick out the truth. Seems like UK roads might not be fun. I'm not interested in cars, man. I've had the cars. I've had company cars, decent company cars. Honestly, they don't excite me at all. out of context, recently I was digging into the honeybee business. It's a whole different universe. There's some crazy industries. Crazy industries. Everyone's seen what that everyone's seen what that Andrew Tate's doing. Is it Andrew Tate, the kickboxer dude? Seems to be everywhere at the moment. One of a very clever strategy. Anyone seen him about? Andrew Tate? Just a kickboxer dude, right? And all of a sudden he's everywhere. No idea. NFT or selling knives door to door. Oh, there's this dude called Andrew Tate, and he's basically, he'll probably come up on all of your social media now. You've heard his now you've heard his name on Siri. But he's a kickboxer, and all of a sudden he's all over social media, right? He's earned a fortune, and he's got one of the most very, very shrewd business model, where he basically did this. He developed a mastermind group, which is a Discord server, got a lot of good mentors in there, okay? And then he developed, which is his program, okay? So he creates a program, opens a Discord, and it's a mastermind group, and you pay $50 a month or whatever it is, $100 a month, $50 a month. And to get in that, okay, what he then teaches you to do is to create your own income from being part of that, okay? So what he encourages you to do, he gives you an affiliate link, and he gives you ideas on how to get people into that mastermind group. Now, what he does is he says, go and set up a TikTok account as basically a tribute page to me, and cut up lots of bits of my content and create your own TikTok posts of me to get people into it, right? So he's got about, I think there's about 20,000 people in the group. And what he says is the affiliate link don't just work once. You have to keep using the affiliate link to get people in to earn money. So he's now got all of these people creating TikTok accounts, creating little snippets. He's basically got 20,000 people managing social media for him. And they all get kickbacks of being in the mastermind group. Now, it might seem like a good idea at first, but what was going to happen over time, the types of people that are getting in to do that are the ones that don't have their own business mind. So they're not a mastermind, right? They're copying someone else to get rich quick, to get into a thing. So once the mastermind group becomes saturated with those types of people, it's not a valuable mastermind group. Make sense? And then the income goes down. And guess what? Over a long period of time, he's no better off than the average business person. Because one, he's going to spend all his money. So this is what happens all the time. And people think about, oh, he's so successful. He's so amazing. That is such a great... Think about it over time. Yeah, it will become a pyramid scheme. It will become a Ponzi scheme, because a Ponzi scheme or a pyramid scheme, there's no product. Okay, so at first when he's doing it, there is a product because there's a great mastermind group. But then as it fills up with these people trying to do this, they aren't masterminds. They're trying to get people into the group, and then all of a sudden there's no product, at which point it becomes a pyramid scheme. He owns a few casinos. Right, so if he then takes the money and manages it wisely, it's a whole different ball game, right? It's how you earn money and how you manage money is a completely different study. He bought a Bugatti. Yeah, there you go. I can see See it a mile off. Anyway, let's 6 minutes till the close of this candle. Let's go over to the dollar yen quick. There's not too much going on here, to be honest. It's just sideways movement. I don't really have much to say about the dollar yen, to be honest. Let's go to the New Zealand dollar. Duncan says, if I only had hair, I'd start a Fonzie scheme. Not many people will get that, Duncan. Not many people will get that. Patterns have been really generous this month. Yeah, they've been pretty good. So New Zealand dollar is one of the pairs that we were looking at bullish. Okay, similar to the euro dollar. We did test the level of inside support here at 62.31. Next levels are down here, where we're likely to see the next level of support. As we pull back, the moving averages on the daily start fanning out. We start looking at strengthening in trend. Mindful that we did put in a retest here on the 4 hour. So if that eradicates any, or it pauses your trend continuation to the downside outlook for a bit, then you just got to wait to see what happens next. But we have seen this formation here, which looks like another pattern setup. Unfortunately, it's not, but I'll explain why in a moment. So it looks very similar to the Aussie, except we don't hit the 50% retracement here. See? That's the biggest difference. So because we haven't hit the 50% retracement, it means that it's not a valid bat. So unfortunately, you're not going to be able to have that aggressive entry into this setup as opposed to the Aussie setup. Do you trade a funded account? Yeah. Or do you mean, do I trade, like, do I allow people to fund, like, invest in my account? Hype to catch this. Oh man, we're coming towards the end now. You've joined you've joined late. We've been going for about an hour and a half. Had some good discussions. Have you guys got anything you want to look at? So let's just recap here. Aussie CAD, nothing. Aussie dollar pushing up to a sell limit order. Pound dollar looks like we're going to get stopped out on this, potentially. Euro dollar FTB set up. We've got 3 minutes to the close of that. Pound Aussie seeing some movement there as well, but nothing I'm looking at. Pound yen pushing into that zone, waiting for a conservative double top entry here, but it looks like we might not get that now. Dollar yen, nothing. New Zealand dollar, nothing. So currently looking for buy setup. Buy setup on what? Aussie dollar? What do you say to over trading? Mostly all over trading, mostly all problems are a result of not testing a system and having trust in a system. Because the reason you're over trading is a result of taking a trade setup that you didn't know the probable outcome of, or you didn't, right? So if you don't know the probable outcome of a trade and it goes against you and you lose money, you start beating yourself up for breaking rules or taking trades at random. And then that is, as George just says, have no rules. Revenge trading and over trading is all a consequence or a symptom of not having rules. There we go. We've just been stopped out on the pound dollar there. I have to do the shotgun symbol. Yeah. And that's another thing, right? You get to see losing trades. Completely transparent. You wouldn't see old, what's his name do that, would you? I won't mention names. Saved by the bell. Saved by the Bell. Remember that. All right. Well, look, that about wraps up this session. I don't have anything else to talk about. TV show, yeah. They were the good old days. If you guys have got anything, let me know. If not, I will keep you updated on these. This isn't going to be an FTB for me now, so this is not a valid setup. But beware of the news out. And yeah, we'll be back tomorrow to do exactly the same thing again. I'll keep you updated on these. I'll get into a kills session later on as well. And until then, take care. Have a great rest of your day. And I'll see you then.